Well, good morning, everyone. Today, I'm going to begin a session on, as we get closer to December 31st, this comes to the conclusion of a tax year, and some things that you can want to be able to do to take advantage of that, I want to share with you. One of the things that we do in business as business owners is we have to purchase a lot of assets. Assets are defined as items and things that you purchase that you own that cost is over a certain amount and is used in the life of the business. For instance, computers, printers, vehicles, cars, machines, equipment, depending upon what type of business you have. Those items that you purchase can be high dollar items, and if you own a business, you want to be able to take the best tax advantage of that. Unfortunately, depending upon how you treat those purchases depends upon how much of that expense you're able to take in your tax year. So in order to get us started to understand, assets and then depreciation, that is his companion to being able to take advantage of some of those asset purchases, we're going to talk about a concept of depreciation. This is going to be important because as we get the basis of understanding depreciation, then we'll be able to look at how do we take advantage from a tax perspective of deducting that cost of the purchase of an asset. So once again, let's just start first in understanding, and we're going to be coming from IRS publication 946. This is a publication you can get on the IRS website, irs.gov. You go through the search for publication 946 or how to depreciate property, and it'll come up. And this is a good handy guide to be able to know what you can do as a business owner in deducting depreciation. So let's take some common elements at first and begin to understand what depreciation is, and then we can look at how we can take that as a tax benefit. And then there are other further things from that, such as Section 179 deduction and bonus depreciation, that we're going to expand upon, which give you a better tax advantage or taking advantage of your purchase of assets. So once again, as we look at defining what is an asset, as I said before, assets are what you own through purchasing them that are part of your business. And these aren't one-offs, and this is where it can get confusing at times, because sometimes we look at supplies, other ordinary business expenses, and we think, is that an asset? Well, a good example, let's look at some things of just regular expenses. If I purchase paper, pencils, those tend to be office supplies. Supplies are some things you need for the ordinary of your business. However, you take it one time, it's used, it's typically a smaller dollar amount, and you expense it as an ordinary business supply expense through your business and deduct it as soon as you purchase it. But assets seem to be longer useful assets or items that we purchase over a period of time. Assets will typically last more than a year. And because of that, they also have a little bit more increased costs when you're purchasing them. So examples again of some assets, buildings, vehicles, cars, machinery, computers, printers, things you use in your business that can last more than a year, that help you in your ordinary course of business, but they expand over more than 1 year. So those are your typical assets. Another example, a computer nowadays, if you purchase a computer, all depending upon the cost of those, can be anywhere from $500 to $2,000. But that computer you're purchasing, you expect it to last more than 1 year. You expect it to last 2 years, 3 years. So when you look at that, an asset is a purchase for your business that can last typically more than 1 year. So you want to keep that in mind. Why is that so important? Because if it lasts as an asset more than 1 year, then the way that you typically have to take advantage of that from a tax perspective is you take the cost of that purchase and spread that cost over the useful life of that purchase. Let's give an example. Suppose you buy a computer that's $2,000 and you're going to expect to use that computer, let's say 4 years. Well, when you take that cost and suppose you bought that $2,000 of computers in this tax year in 2022, well, even though it costs you $2,000 this year, you can't necessarily just say, okay, I'm going to expense that full $2,000 on my tax return. Why? Because it's an asset purchase. That asset is to last you more than 1 year. We're saying that we expect to use it for 4 years. Well, if you take that $2,000 and spread it over 4 years, that's $500 a year if you just do straight line depreciation. Once again, straight line depreciation is taking a cost and taking that same amount over the useful life. So $2,000 in this example, over 4 years, that's $500 a year. So then in my 2022 tax return, I could only take $500 of that $2,000 expense as a deduction. That's if you're using straight line depreciation. Well, when you get into tax accounting, it allows you to, and as you see on the publications in a summary page 946, you see something down there where it says, okay, MACRS, M-A-C-R-S, that's modified accelerated cost recovery. So what that's saying is that even though we normally on a accounting basis take depreciation or the cost of that asset over useful life, in this example, $2,000 computer purchase over 4 years, that's $500 per year that we're going to expense that off. Well, if you do MACRS, modified accelerated cost recovery, there's a table that's within this publication you can look at that will say, if this is an asset like a computer and its useful life is 4 years or so, you can accelerate that depreciation. So instead of straight line depreciation, which is $500 per year over 4 years, you might be able to, based off the calculation of the MACRS, be able to say, I'm going to take $1,000 first year, $750 the second year, and $250 the third year, because you can modify and accelerate that depreciation based on the table. So when you get into depreciation from a tax perspective, you can use your modified acceleration as a basis of depreciating that asset sooner and faster. So once again, let's just recap on depreciation. Depreciation is taking an asset, a purchase of an asset, which is an item that you're going to use in the course of your business that can be used for more than a year time frame, and it's typically a higher value costing item. And you spread that cost over the useful life. From a normal book accounting perspective, you do that on a straight line basis. So a $2,000 computer that's useful for 4 years, you do $500 a year. However, for tax purposes, you can select and modify accelerated cost recovery or MACRS as the approach that you're going to do depreciation. And you take that $2,000 computer, run it through the table, and it could give you accelerated depreciation. So you could probably take about $1,000 that first year, $700, $750 the second year, and then $250 the third year, because you're modifying, you're moving that cost up sooner to depreciate. And then that way you can take that as more of a business deduction on your tax return. So that's kind of what you have when you're looking at large, assets, and you want to take that cost and spread that into your tax return. Well, there's two other caveats to that you can use to be able to take that depreciation. Hey, good morning, Barb. So, hey, good morning, Barb. You're on mute. I still can't. Okay.
All right, I can hear
There
you
you go.
now.
Yeah, there you go. Yeah.
I was on the Zoom. I was on the Facebook. I was like, how do I get on the Zoom?
Oh, did you find the link?
Yeah, I found it.
Okay. Yeah. Yeah. I put it out there in the Zoom. I mean, out there on the Facebook site, so that for folks that can just want to look at it. But for those that want to participate and ask questions, you have to get on the Zoom link.
Okay, gotcha.
And I usually put the Zoom link into the business network group. So it's
Group.
be there, so that, because that's a private group that folks, I want them to get into that group and go through the screening. So
Okay. All right. I want to ask you, is the Zoom ID always the same, or do you change it every time?
no, it's the same. I have different. So for the business network, I have the standalone Zoom network.
Mhm.
It stays the same for that.
Okay. I don't mean to interrupt you, but
No, no.
I sit on a board, and I really is it okay to invite them to your group? Because unfortunately, a lot of them don't know a lot of stuff about, I mean, they want to run a nonprofit, but to be honest with you, a lot of them don't know a lot of stuff that they need to do for it. So I did inform them of you about our last meeting. Our next board meeting is the 17th. And I really did recommend them to your page, because they have to learn how to run that right, or else it's going to be some trouble.
Yeah, definitely. If for anyone that wants to get into the Vision Business Network group, it's a group that's a private group that I utilize on Facebook, but all you have to do is you have to be able to join the Visions 2020 LLC. That's my page. So you go in and join that page, and then within that page, you can ask and request to get into the business network group. I have many,
Okay.
but I have a Visions 2020 business network group, but you have to be a member of my page, and then you can request to get into the group. And when you send that invitation to the group, it'll come to me, and then I'll be able to let you into the group. Or if you're interested, you can send me an email and I can email you. Or if you have a Facebook page, I can send that to your Facebook page so that you can join into the group. And the reason I do that is because I have a disclaimer that I want people to accept 3 different things as they go in: accept confidentiality, accept that this is information for educational purposes, that they need to take on responsibility. If they really want to do something, set up an appointment, get with a tax planner, get with a business professional, because I can't cover everything. So I don't want people just to hear this and then run with it, because I'm just can talk in general circumstances, but specific circumstances might dictate something more different than just what they're hearing. So I want them to go through that caveat before they can enter into the group there.
Yeah, I did stress that. I said, y'all, we need somebody professional to really help, because like the website is almost done, but we got people, when you have people that's not familiar with like what goes with websites today, how we're catching up with technology, and you can almost do everything on a website for real. You know, they just need, I know what they need, but I wasn't trying to like, think I'm smarter than nobody. I just told them I learned from somebody who's teaching people how to do things right. And I think they should join you. I personally told them that.
That's
So
what
hopefully they do.
Yeah, that's what this group's about. I mean, this is an opportunity. We have the business network group that we have the second Saturday of each month. And this is an open group, which means that you have to go through the process I stated earlier. Join my page on Facebook, request access to this private group, Business Network LLC, that'll get you into the group. And this is a business network. So we have those individuals who are in business, who want to continue to grow the business. I don't come with a pre-planned type agenda in this group, because I want those who participate in the network to share, the thoughts, information. It also wanted to be kind of confidential. So depending upon what we're going to talk about, I might go live or not, so that people can get the answers they need. But I ask for those who want to go over and have some topics, that they submit those topics to me by Wednesday, before the group on the second Saturday. That way, if there's some research that needs to be done, the sooner the better. I can look at that. I can maybe consult with some professionals and all that so that we can present that, so we can share that information. So
Okay.
business network is not necessarily me. It's about us coming together, just like you had sent to me about about depreciation. So I'm going to go over that today with depreciation,
Okay.
advantage of that. It could be anything that we can talk about from a business network.
Okay.
Now for those who want to get into more in-depth sessions that are planned and have curriculum, I have a business development group, which I'm waiting to get new members into it. And that's something that takes about a year, but I would do that on the fourth Saturday of each month. Well, I take a
Okay.
topic and we go over it. There's a curriculum for business development. So we talk about everything from business organization, legal structures, how to market, developing a business plan over that period of time so that you know what it takes to run a business. And then I have another sessions that talk about personal development, how you as a person can develop to make yourself better for yourself, family, and then also for your business. Because unfortunately, what I've seen in my experience is that most reasons that businesses fail is not because the business was a poor idea. It could be timing, but typically it's because the individual wasn't ready. That's usually what happens. I mean, or wasn't mature enough to handle what they need to deal with. I mean, a good example we can see out there now, you can see what's going on with Kanye, multi-billionaire, but because of how he's going about addressing certain things, whether right or wrong, it's tearing him down. Now, he could go about trying to convey some of the same messages in a different manner and in a more proactive way. But I think himself personally, there's some things in him that are preventing him from doing those things, and it's affecting his business. And that's on a large scale. But when you look at us, it's the same thing. Our inability to get along with people or develop team or trust people, that's personal development. So I recommend, when I coach execs and I do executive coaching, I start with personal development series and elements of that. And then I'll work into some of the businesses, because most people come say, I need to do this. I need to hire more. I'm having trouble with this. But then when I find out and do an assessment with them, I can see that they're pushing people away, or they don't have the emotional intelligence to understand how they're coming across or how they're perceived, or they don't understand different personalities. So they're trying to communicate on a type A personality, but the person's, might be a type B. So, and they're not very communicating. So I do have that personal development series that I've laid out, and I've done that over the years. So depending upon the requests that come in, I can be able to lay that out for next year. Usually I want to start that sometime in January. So depending upon the requests that come in from new members in the group, if they want to deal with business, I have a business development series. If they want to deal with themselves and growing and maturing themselves, I have personal development. And if they're operating in a business, they want to help increase their business, that's the business network that just runs on the second Saturday of each month and keeps going. So, so all those groups are out there on Facebook under my Visions 2020 LLC page, but you got to join my page first. And then you got to ask for invitation to those different groups in the network, business development, personal development. And they have videos, they have information, the curriculums, all the materials in there. And then also for those who just want to look at some of the videos, I do put the videos out from these sessions out on YouTube on my Vision 20 page. So it's out there also.
Yeah, I used your the the question was, how can I have something copyright? And I remember we went over that, so I went and got your video and sent it to them.
Okay. And all I would ask for those that go out there is to help me out, just subscribe to the channels, join my Facebook page, because that helps as I grow and increase my social media presence there.
Okay, I did. I joined everything of yours.
Okay. All right. So, so I'm going over depreciation, and I kind of started out earlier on just stating that, when you look at your business, there's certain things, the things that you own of your business, they're called assets. That's the easiest way to look at it. So if you own anything that's part of your business, is an asset. If you owe something, it's a liability. It's what you owe to have to pay to somebody. And then whatever's left is your equity. It's your earnings, that's left. Well, one way to deal with taxes and to get the most of tax advantage of your purchases especially if it's an asset, is to depreciate it. And so when we look at assets that we want to depreciate, we look at some high dollar type of items, such as cars, equipment, machinery, computers, printers. Those are things that you have to use in the course of your business. But typically, when you buy those things, you don't expect to buy them every year. You want them to last over 2-3 years, so they last typically more than 1 year. So assets that you purchase for the course of your business that last over 1 year, those are typically what you look at as fixed type assets, buildings and things like that. But the way that you can get that reimbursement on your tax return is to depreciate it. You can't sit there and say, I'm going to buy a $2,000 computer and I'm going to just take that $2,000 all at once, typically. Now, we're going to talk about ways you can do that. But typically, when you buy an asset, you have to take that over the useful life and take that cost over. And so, using the computer as a good example, is a $2,000 computer. You think it's good for 4 years. On your accounting, you would book that on straight depreciation, meaning taking that cost and dividing it over the useful life. You would take that $2,000 over 4 years and you would depreciate, expense it $500 a year.
Okay.
That's just straight depreciation. However, as I refer to publication 946 on the irs.gov website, you're able to what we call modify that depreciation and accelerate it so that you can take more of that cost sooner that you had when you have purchased that asset. That's what if you look down at the list and see MACRS, MACRS, that's modified accelerated cost recovery. So what that means is, instead of taking it straight depreciation, like $500 per year over 4 years, if you go through the table will allow you, based upon the useful life and the cost, to accelerate that depreciation. So instead of taking 500, you might be able to take $1,000 the first year, and then 750 the second year, and then 250 the third year, and move that depreciation up sooner. So when you deal with depreciation from a tax perspective, you don't want to use straight depreciation. Typically, you want to go MACRS because you want to recover that cost as soon as possible and take the tax advantage. So that's something you can do straight off with any asset, is take it over to useful life, do the MACRS, and modify that depreciation and take that depreciation sooner on your tax return. The reason why it is so different than just a purchase like an office supplies, suppose you buy $1,000 worth of paper. Well, you expect that paper to be used as soon as you can. You don't expect that paper to last 2 years, 3 years, or whatever. So if you bought $1,000 worth of paper, you can expense that as an office expense in the same year that you purchase it. Whereas you bought a $2,000 computer that you expect to use for 4 years, you have to do that over the useful life of 4 years. So that's the difference when you're talking about, depreciation and then and just a regular expense that you're going to take. Well, there's 2 exceptions to that, and they've been around forever. It's just that we want to make sure we can take advantage of that. Okay. Let's say we get into some bigger thing like a car or vehicle that you own that's for the business purposes. You can deduct that. If you own that business in a car, if your business owns that car or vehicle, then you can take the depreciation of that vehicle and run it through your business as a depreciation, just like we did with the example like the computer. So whatever that cost was over, and then you go to the table for modified accelerated costs, you can look at that and it'll tell you how much you can take in the first year, second year, third year, fourth year of that vehicle. And then you can take that as a tax deduction. So even if it's like $20,000 or $25,000 or whatever, you can take that as a business deduction. The key is it has to be used in business use for your business use. So either you purchase it outright, the titles in the name of your business, that's key. You use it for your business. And then also, if you have another vehicle that you can use personally, then that makes it much more cleaner, because then the IRS can't say you're trying to use a personal vehicle for business purposes. So if it's truly business, you want to make sure it's titled, it's used for the business, and you have other means for personal. Okay. The second part of that will be if you But now suppose you just have one vehicle. Yeah, I think I lost your bar. Suppose you just have one vehicle that you use for business and personal. Well, then you have to track it through a travel log, where you look at the mileage and you take the mileage for the whole year. Then you track how much of your mileage that you have for business purposes. Then that percentage is what you can use as a deduction. So if you don't have two distinct vehicles, two distinct uses, yeah, I can hear, there you go.
Okay, sorry about that.
Yeah, what I was saying too is typically, okay, you have one, if you have only one car, you can still take the deduction, but you have to do a little bit more work in substantiating that. So if you only have one vehicle that you use for both personal and business, then that's why you have to have a travel log then. And you track the mileage of your business over your total mileage for the year, and that percentage is what you can take as a business deduction. So you would have to document that if you're using one vehicle for both personal and business. That's why if you can get to a point where you can just have a business only vehicle, it's much cleaner, have it titled. And then you also have a personal that you can show that, you can show that you're not using your personal for business. That makes it a little bit cleaner, but you still can, if you only have one vehicle, you have to document the mileage of business miles over total miles for the year. And then you can only allocate that percentage for your business deductions. Okay, now let's go into two different other there's two different exceptions that you can do to actually take the full purchase price in a year that you purchase and deduct that. And that's what the first part we're going to deal with is the 179 deduction. And if you go to publication 946 and you see under chapter 2, election of the section 179 deduction. Let's go here. Okay, section 179 deduction. What this section states basically is saying that the items that you're deemed as assets that you depreciate, where you have to take it over a period of time in a useful life, you can take that deduction, the full deduction, in the year that you purchase, in the tax year that you purchase. So getting back to the computer example, if you purchase a $2,000 computer, and instead of spreading that over 3 or 4 years for the useful life and taking that deduction like that, you can then take that whole $2,000 and elect the section 179 deduction and take the full $2,000 purchase in the year that you purchased it. So you don't have to spread it over and take that deduction and expense on your tax return over 3 or 4 years. You can take it in the first year that you purchased it. The difference, though, and the one caveat to this is same thing with a vehicle purchase. You purchase a vehicle for $20,000 for your business. instead of taking it over 4 years, $5,000 a year, you can sit there and take that full $20,000 in the year that you purchase it if you elect to take the 179 deduction. But here's the thing that you have to be aware of. You have to commit to keeping that asset for the useful life period, even though you've taken that tax deduction in the first year that you purchase it, the full deduction. Because if not, then if you sell that asset, it goes bad, or you get rid of it, then in the year that you got rid of it, if you haven't completed a full useful life, then it's what we call a recapture that needs to take place. You have to assume, okay, if I would have had this asset up to this period of time, if I was expecting to use it for 4 years, but I got rid of it in 2 years, but I took the full depreciation in the first year, then I had 2 more years left. I have to recapture that back. So I have to take the difference of what it would have been if I would did the normal tax depreciation. Let's assume, for example, a vehicle that's $20,000 that we're doing $5,000 a year. And so after 2 years, I normally would have depreciated $10,000, but I took $20,000 depreciation. All right. But I want to make sure you get this here. Okay.
Okay, I'm sorry. I keep getting knocked out. I don't know what's going on. I was like, what the heck?
Well, I'm going over then the 2 caveats that you can do instead of having to spread that depreciation over 4 years or 3 years or whatever the life of that useful asset. There's 2 ways that you can take the depreciation, all of the depreciation that you normally do, and take the full cost of that within the first year.
Hey, Fred, real quick. Sierra's trying to get in. She got a new phone. How do I send her the link again?
Let's see here. Is she part of the business network?
I send her everything to join.
Because I know, because it would be there on the first page. If not, let's see here.
She said, I got a new phone. I need the link. And I was like, oh, how did I get her on last time?
Yeah, I
Send
mean,
it to you. I wasn't sure how I got her on last time.
unless I sent the link out, it's either I can send it, if I had her email, I can send her the link. I can, or I can send
Yeah,
you.
I'm gonna text it to you right now. I got her email.
Okay.
I'll text it to you right now. Let me see. Copy. And because I texted her earlier and I said, you getting on, and she didn't answer me. And I was like, oh, okay, maybe she won't. She said, oh, cuz I got a new phone. Can you please send me the hold on. Let me go back here and get this real quick. Oh, I'm sorry, I'm messing up the whole thing today. All right, Sierra. I'm trying to keep on top of her. She's a young lady trying to do good, learn some stuff. And she's my little cousin, and I really try to help her learn. Like I said, you got to get under people who's doing good things. Can't keep being with them people. All right, there you go. I sent it to you just now.
Okay, and then I'll see. Let me get this. There we go.
I'm gonna let her know that you're gonna email her the link.
Yeah, I'll do this.
Okay. I'll let her know that. Try to help her stay on her toes. She got some great business things she's trying to do, but she gotta learn how to operate it better. Right, don't forget to let me know if you need something from Apple.
Okay. Yeah, I'll be trying to hit you up pretty soon.
Okay.
Like
So I can give you my friends and family discount.
okay. All right.
Okay, thank you.
So when we're looking at the 179 deduction, what this lets us do is say, okay, that vehicle, that car, for instance, that $20,000 that it costs us for purchase, we normally would have to do that over the useful life, 4 to 5 years, and do it on a modified accelerated basis to get most of that depreciation, but over that period of time. Whereas on a straight line depreciation, it would be $5,000 a year, for that 4 years. But with the Section 179 deduction, what it allows us to do is say, okay, I'm going to take that $20,000 purchase, I'm going to deduct it in the first year that I purchased for tax purposes. But there's a caveat. If you get rid of that asset that you took the 179 deduction before the useful life, the 4 years, for instance, then you have to recapture or take off of that depreciation and add that back as income to you. Okay, so what that's saying is, as an example, suppose we purchase a vehicle of $20,000 over 4 years. We do $5,000 depreciation that we deduct over each year. And after the second year, we sell that car. So it's no longer an asset of the business. But we took $20,000 already as a depreciation. So what you have to do is take the difference. You have to go through and say, okay, after 2 years, so what you have to do is that after 2 years, if you got rid of the vehicle, I normally would have, on a straight line basis, depreciated that vehicle by $10,000 in 2 years. But I took, under 179, $20,000. So there's a $10,000 recapture. So I have to basically add back that $10,000 depreciation back and take that off of my books. So that's $10,000 being added back. That's going to kind of be treated, that's less of an expense deduction now on your current. So you got to be careful. So if you do elect the 179 deduction, you got to assume that you're going to keep that asset for the full useful life. So
I have a question on that. So I was reading or watching another video where they were saying, do you know why people with businesses is driving Road Rangers and big items? Because you can write these items off, anything over 600,000 pounds, something of that nature. I was like, what?
Yeah, well, that's why I put the caveat up front that, consult your tax professional when you're ready to execute on these things. These are just general ideas because you're right, there's weight limits tied to amount of vehicles, but it is true, based upon the weight of a vehicle and a certain cost, it has to be under a certain dollar value, you can write off $20, $30, $40,000 worth of vehicle if it's for your business and you can substantiate that.
Okay.
So you know, that's the piece that you got to be careful of, but it is true. Depending upon what that vehicle is for your business. And this is the things that I say to make sure you can substantiate. What are the things that you can substantiate that a vehicle is part of your business? There's a couple things. One, is it titled in your business name?
Yeah.
Because remember, if you're LLC corporation, your business is separate from you. So therefore, if it's titled in your business name, then that shows as an asset of the business. So that's one way to substantiate that. The other way is, does it have advertisement on your vehicle? You see sometimes, you see a lot when people are driving like normal cars or vehicles, but you see, Joe Smo plumbing and things like that are like, you have magnetic signs that you can put onto your vehicle. That's another way to substantiate that this vehicle is being used for your business.
Okay.
So those are things, and that's a good way, especially if you have a vehicle. And then the other way, travel logs. If you take it, you have a log, and I have a log that's built into my QuickBooks Online, for instance. It has a separate add-on package that has a GPS so that when you're in your vehicle, it will log your miles, and then you can go in and assign that to a particular client. And that way, at the end of the year, you can run a travel log that shows, here's how many miles that I traveled to this particular clients. And you could substantiate from business purposes. So yes, you can buy different type of vehicles and all that and deduct them through the business, but they have to be for business purposes, and you have to be able to substantiate that.
Okay.
So that's a good way. So, but now with myself, I have a separate vehicle that I have that's owned and it's licensed, and it's entitled by my business. So if I sell it, I have to sell it through my business, and those proceeds would stay in the business, those things. So I have that, and I have a personal vehicle. If you just have one vehicle that you want to take a business deduction from, then you got to track mileage over the total mileage for the whole year, and then take that percentage and use it.
Wow.
So those are the things that you got to keep.
I don't care. Move.
Sierra, put your thing on mute.
I'm sorry. I thought it was. I apologize.
Sierra.
So any questions on that, like 179 deduction, or the 179 deduction you can take? Just to recap, that 179 deduction allows you to take assets that you normally have to spread that cost over your useful life. It allows you to take that asset purchase in the year of your purchase and deduct that. And so that's a good thing to take, but keep in mind, it has to be an asset. And we've talked about what assets are. These are things, purchases for your operation of your business that are useful over more than 1 year. They're typically equipment, computers that might be there, printers, vehicles, machinery. Those things can be done and used as, those are viewed as assets. And then you have to take the cost of the asset and spread it over useful life to take that deduction. However, if you elect some exemptions, such as the Section 179 deduction, you can take the full cost of that in the year that you purchase and deduct that fully. So now, but if you don't keep that asset for the useful life, then you have to pay back the amount of the depreciation that you weren't earned or entitled to. So you got to keep that in mind if you want to take
good information. Good information.
Then the other piece of it is similar. It's what we call, it's a similar type of thing whereas Section 179 limits the amount of the value of the asset that you can take as a 1 year depreciation and the amount of depreciation. So there's some limitations in Section 179. However, bonus depreciation, depending upon if it meets the quality, if that meets it, it used to be you can only, these are higher costing items and things like that. They're above that 179. It could be like $100,000 vehicle or something like that. You can't take that under 179. However, or the weight might be too much more than what it allows for it to be. Well, then that's where you get into bonus depreciation. It used to allow, like 20% of what you normally would be able to take in that first year. It would allow you to do that. However, with the new regulations that took place in Congress, it's allowing you to take 100%. So that's what that bonus depreciation is for those high dollar items, heavier vehicles, things like that. Then allows you to take that full depreciation as bonus depreciation. But once again, it's the same caveat. If you don't keep that asset for the period of time, then you got to recapture that back and pay that back. So those are the, so those are the things that that allows you to take the asset and how you expense that into your tax return as depreciation expense. So once again, if you have any questions on that, I refer you to this publication 946 on the IRS, and you can go to the irs.gov website, and then you're able to take advantage of that and pull up this publication and read through, and it gives you some ideas of more specific things, how you can claim, how you can be able to substantiate the depreciations and things. So here's a good example. Here's the dollar limit for 179, meaning that the maximum deduction that you can do is $1,050,000.
Oh,
but keep in mind, the reason why you're like, oh wow, that's a lot. But if you're buying a $20 million factory or something like that, 15 million, then you can only maximum take that as a maximum deduction. So, and then the other thing, it limits to the asset to no more than $2,620,000. So your asset can't be more than that to take advantage of this deduction.
okay.
So, but if you fall out of this deduction limits, then that's when you can look at the bonus depreciation and looking at that as a measure, especially since it went from 20% up to 100%. So once again, I recommend you look at this. So if you're talking about purchasing some building for your business, or those are things you want to take advantage of. Vehicles, equipment, computers, things like that, printers. I mean, I got a laser printer that cost me like $750, but I double up so that in my office, so $1,500, I can be able to take advantage of that instead of waiting over 3 years. Take that in the year that I purchase it, get that cash back sooner.
Oh, okay.
So let me just stop there. Let me ask any questions. We have some time left, a few minutes left. Any questions about that or anything else that's related to business tax purposes as we get closer to December 31st tax year end?
No, I was just concerned about that vehicle part too, because sometimes like you said, be careful with it. I mean, people were saying now it was a little bit easier now that you can get a vehicle for your business. But just thinking about that, like you said, you got to be making sure like you keep up the mileage. You said you use QuickBooks for that, Fred?
Yeah, most of my own personal tax package I use is QuickBooks Online. I have that for some other clients that use QuickBooks Online also. And for an entrepreneur, sole proprietor, I recommend it highly because you're able to, it's a subscription basis. So depending upon what level you get, it could be $20, $40, there's one for $99. So the bigger your organization, more complex, you need to get the higher level type. But for me, I think I'm on the 30 or $40 per month package deal where I can do my accounting. I have my bank accounts that are tied to it. So once I make purchases, it automatically come in. So it makes it easier to reconcile. If you need to, you can use QuickBooks additional service for doing 1099s and W-2s and running payroll through it. But I use Paychex. So Paychex interfaces right with QuickBooks. So it does my payroll entry for me each time I pay myself out of my business. So I
Mhm.
like QuickBooks Online, but then there's a feature on your phone. You can do all these things on your phone because it's cloud-based, it's an Oracle-based program. So I can go on my phone and send invoices if I'm on the fly. I can look at what's coming in. I can do, I have a scanner so that if I'm at clients and I do type of work and they wanted to hit me with a credit card, I can swipe it and it can go right in that way. Or when I
Mhm.
send invoices, I can send them electronically and they can either do credit cards or bank account payments right there on the spot, and they'll go right into my account and I can see that on the fly. But the big thing was the mileage part, that it has a GPS built in. So when you drive and you set up your vehicles to different vehicles, you can sit there and it will track your vehicle mileage, and you can tell what client it is. And if it's someone you go on a constant basis, because I have clients that I do, like I go typically the same place on a Monday, Tuesday, Wednesday, and the different clients, and I have them scheduled in, it will track my mileage for me. And I can set it for reoccurring to save. So automatically it'll just track and then post my mileage so that I can run a report at any time to say how many miles I've driven to what particular clients. And also, if you do things for charity, you're able to do a charitable deduction on mileage deduction to, for charity. So I'm able to track those too also.
Oh, okay.
And then I track my time that I bill to different clients through my QuickBooks too, it has a time and attendance system on that I can track my time, and it'll help me at the end of the month. Okay, I need to bill this client. So it'll show, here's the amount of hours you've charged off. Boom. And I can sit there and put that into the invoice. So
Oh, okay. Now, is one of your vehicles, one of your vehicles strictly for your business, or you
yes.
use it split? Oh, okay.
Yeah. I use one vehicle for business, and then I have one that's personal.
Okay. That's good to know.
It's a little bit cleaner, but once again, if you only have one vehicle, you can still use it for your business, but you have to track the mileage, and then you can only take the percentage of that business use against the expenses of that, whether it be depreciation or whether it be
Standard.
repairs or maintenance and things like that.
Mhm. Okay. I was just trying to figure out which way to try to, because I would like to have a vehicle for my business, because I ride around and see people with the insurance, you know what I mean?
Yeah, that's exactly. And then there's different places, because I looked at 3 different places that will have the magnetic signs that can attach to your vehicle. And it's going to cost anywhere between like $300 to $500, depending upon how much lettering you do and all that. But then that's something
Okay.
else that will help. So if you do get the vehicle, make sure you go that next level too. That way, if the IRS will ever try to come out and say, this is a personal vehicle, then those things will substantiate the fact that you're using it for business, a log, and the fact that you have signage on your vehicle. That's why you usually see, just drive down the parkway, you'll see all these different, like, Joe Repair LLC.
Right. Yeah.
Why they're doing that, in case.
Okay.
So.
Okay. That's good to know. I got to
And the
get more
purchase
on
of that
top of
sign
that.
is the deduction, business deduction also. So.
Okay. That's good. That's something I'm looking towards, working towards.
Mm-hmm.
Sierra, you have any questions?
Sierra, I was glad you're able to join.
I'm sorry. Yes, I'm here, y'all.
Yeah, I was just explaining to Barb too. The easiest way to be able to get the connection is, I'm not sure. I had so much activity over the last couple of weeks. Have you signed on to my Facebook page, Visions 2020 LLC? And
I haven't been able to do anything because I'm just not, my other phone, my iPhone
okay.
was acting up. So I had to get a temporary phone.
Okay.
This phone is crazy. It's a cheap little Android. That phone can't do anything.
The old Android versus iPhone, they all debate.
I know, right?
I don't know who, man, I want to build my own phone at this point.
Well, Microsoft did and tried to do that and they failed. So, but yeah, so anytime you get an opportunity, join my Visions 2020 LLC Facebook page.
Okay.
And then you can, once you do that, then you can request access into the business network group, and that will, because I save all the activity information out there, I'll give you any notices right through that can send that out to the group. And then you can also see videos out there on Visions 2020 LLC on YouTube. I put videos out there also. And then the Visions 2020 LLC, and make sure you subscribe. And then that link that you got to this Zoom link, that's a link that's tied to this group. So that always will be the link I use on the second Saturday of each month for this business network.
Okay, I'm gonna try to get in now and do it while I'm cooking, I'm not busy.
Yep, that's what you got to get it done. As an entrepreneur, because I mean, I'm going to be working on some tax entries or payroll entries the rest of this afternoon for a client.
Okay.
That I have to get in to help them invoice out. So, yep, that's how it's 24/7. But at the same time, the one thing I will say as I transitioned on my own, because as of January, it will be, let's see, it'd be 3 years. It would be 3 years.
Oh, that's great, Fred.
So it can be done. I mean, as
Yeah.
I explained to folks beforehand, I mean, I went from $200,000 a year salary to the point to nothing to be able to build this up. And, so that's why I share in some of these business network and the business development and personal development series, what it takes to get to that point. And so that that you can have the flexibility and still be able to kind of make a living. And
so Fred, I do have another question. I'm going to, I had BLR professional services for a year, but since my insurance business is like going to be the main, like I still got Blooming Naturally in my insurance business too, but that's the one I really want to kind of like, I went on, what's it called? Fivers or whatever.
yeah, Fiverr.
Yeah, they redid my logo for Blooming Naturally, but I'm trying to think of another name for my insurance. Like I want to change, I already have that EIE number. I was going to keep it, change the name to go with what I want for my insurance, like maybe like Rogers Agency or something of that nature. I'm not sure what I want to name it yet. I'm still working on the name. But that is the main business because that's the business I do all the running around with. Blooming Naturally is my body and oil business. I'd make natural bodies and butters and stuff, and that's always going to be there. But the main one I want to mainstream is going to be my insurance business because that's helping people like set up insurance for their kids, home mortgage protection, annuity. So that's really my biggest money maker.
Okay. And there's a couple of ways that you can kind of look at that. If you want to keep the same federal ID number, you just have to, and you want to do a change of name, there's a IRS form that you can do a change of name for that, to go through that process, to keep the federal ID number and do change of name, where they kind of like, it's almost like you're filing new again, doing that new filing, but there's a form for that. That on the federal level and on the state level too, you probably would want to do that change of name also for the PA 100 in the state of Pennsylvania to be able to do that name change.
And also I need to make it an LLC, right? My insurance business.
It goes a bit now. That all depends. Okay, once again, this is the caveat for your insurance business. I typically, for the most part, LLCs are more advantageous because you can just file. You still got to file. You gotta still file your federal form, the state form that you're in the state that you're filing to set that up as an LLC. But I will refer you to that under our business network. We talked about different corporate advantages of businesses. I would refer you to that video because it talks about LLC, corporations, sole partnerships. But I typically, like most business starting out today, are like LLCs because they're easy to get started. But once again, you still got to file your return. So if it's a single entity LLC, I mean, you're just the only person that's going to be part of that business, then single entity LLC. So then you would have to file a Schedule C with that LLC federal ID number underneath your normal 1040 for tax purposes for the federal side and also for the state side. Now, if you're going to have multiple people in that business, then it'll be a corporation that you have to file the 1120 with for tax purposes. But most
people that come up under me, they have to be like their own individual. Like I can have people on my team, but they're not really under my business.
Correct. Right.
They build their own. So that still would be a LLC, right?
You would still be an LLC, but then you would be
Okay.
paying them as a contractor, and they would have to
Okay.
1099 them out that way. But then they would have to meet that. They would have to meet that condition for a contractor. So, and this is why I put the caveat out there. They just can't,
Okay.
because then is there going to be more than $600 a year? Are they independent? Do they have independent agreements? Do they have multiple agencies that they service other? They have to fall into that. Else, if they're going to be employees, you can still be a single entity LLC and have employees.
Oh, okay.
That was my next. That was my.
So that's why I say there's a lot to go into that. So the seven say yeah, LLC, there's a lot to go into that before you make those decisions.
Right.
What'd you say, Sierra? You have a question?
I was agreeing. But I had questions, but he answered them already.
Okay.
Okay.
All
Well,
right then.
Okay. Well, Sierra, like I said before, if you have the opportunity, join those groups and the YouTube page. And then if you have a topic that you want to talk about, I do these business network sessions on the second Saturday of each month. So send me an email or DM me in the group and I'll respond and then see whether or not I have the time to look at that to be able to present, and then we can go over that.
Okay. I request to join the group on Facebook as well.
Okay, good. I'll answer that when I get back on that and allow you into the group. So and then we can go from there.
All right.
Okay. Well,
Okay, guys. Have a great day.
Thank you all for attending. And
You're welcome.
I'll see you guys next month. Let me know any other topics you want to talk about before then, and have a great rest of the day.
Okay, you too, Fred. Thank you.
Okay.